Hello, welcome back. My name is Curtis Storr. I'm a trainer with Family Investor, and today's topic is going to cover something that I had written on Investopedia in answering a question from a young man who has just inherited a lot of money. And it really sparked motivated me to do this blog today because I have a lot of clients that are in the same position as he is, different situations, and I'm going to cover those in this training. So I'm going to switch over to this screen so you can see what we have up there. And first of all, another person in my life that came into some money is my niece. My sister had passed away a while ago, and when my niece turned 18, she got the life insurance policy, and she actually posted it on Facebook, which gave me a heads up, but also I needed to contact her. And at that time, we as like her uncle, I knew she needed to be protected, because she really didn't know how to handle that kind of money coming into her. So she needed to know what her options are just like everybody else. So I'm doing this training for all those who have a large amount of cash. And first of all, where did it come from? I mean, that's a life insurance policy, which is an inheritance, or it might be an inheritance just because somebody had a large amount of assets that were passed on to you. Some people, I have clients that have savings accounts. It's amazing. I mean, as an advisor, they tell you to have about 6 months or more in liquid assets or savings in case you lose your job. Well, I'll get into that a little bit further, but also I have another partner of mine, well, several of them, but when they're selling an asset, whatever it could be, mostly real estate, because that can create a taxable event. And so taxes are one of my main topics in my trainings, because I believe that if a penny saved is a penny earned. So let's start off with inheritance and estate taxation. Inheritance tax it varies from state to state, and I do recommend you hire a CPA, a certified public accountant, because they're the ones that know the law. It's part of their certification is to always stay up on the IRS tax laws. And also, they could talk to you about estate taxes, which is different, but it only applies to estates that are over 5.45 million. So anything below that is going to be tax-free, or not taxable. I shouldn't say tax-free. So my main thing is to get with a CPA that knows what they're doing, and ask. You may not have to do anything until to the end of the year, except if it's most likely a taxable event. You're going to have to send some taxes in to pay those taxes now. And the reason people pay taxes to the IRS immediately out of your paycheck and stuff is because they know if you don't take it out before you get a hold of it, you're probably going to spend it. And that's how a lot of things are structured. Like I said, I have clients who have savings and CDs, because they're told, you got to keep some liquid funds until we go through what I call a portfolio review. And plus they go through my trainings and they find out that there's other ways to have liquid assets available, but other benefits to go along with that. So and those items that I discussed with them are what I classify as contractual investments. They're an agreement. Like life insurance is a contractual investment. There's some investments that portfolio managers, they're contractual. They're they will pay you according to what that piece of paper says, the contract. Once they sign, they're obligated to do that. Like with a life insurance policy, as long as you pay your premiums, we will do this. This is what we will pay you. Okay, with taxation on an asset, like if you're selling a home, um, real estate, you could do a 1031 exchange. It could be your primary or a rental property. So 1031 exchange may help you, and 1031 exchange may not be your best option. Um, you may want to pay the tax. It all depends on your situation. So once again, speak to a good advisor or CPA that knows the tax laws. Life insurance is the same thing, and endowment and annuities, they're all covered under what's called a 1035 exchange. It's basically the same thing. That what it does is it includes certain paperwork to the IRS using, I think with a 1031 exchange, you have to use a third party to show that you've never really touched the money. So it never passed through your hands, and all of it went from point A to point B, and it never touched it. You just shifted it from one asset to a like or kind asset. Um, Businesses, there's so many factors to consider. If you sell, because that could be an asset. You might have interest in a business. So depending on how the business is set up, is it a C Corp, is it an S Corp, is it sole proprietorship, is it multi-member, all these things, and is it being taxed as an S Corp or a C Corp? Too many factors to consider. So definitely you need to get involved with a CPA. And one of the things we teach is not paying taxes is not a bad thing. A lot of people think that if I don't pay taxes, I'm a bad person. That's not true. Tax laws are written as tax incentives. They are. They're incentives they give you incentives in or tax deductions, we call them, or tax credits to get married, to buy a house, start a business, and that's just to name a few. I could go on and on. But not taking advantage of tax incentives is like not accepting free money or a gift, or you win the lottery and you say, nah, I don't want it. I mean, seriously, an inheritance, or even saying no to a scholarship. I mean, it's free money, and that's the whole reason that the tax laws are written the way they're written, is incentive 5. I don't even know if I said that right. Give you an incentive to do things, because that's what makes the economy grow. Is if you're out there, business, hiring people, right? It's all part of it. And if you don't take advantage of those tax incentives, I call them, it's like turning down the lottery. I mean, that's kind of dumb, right? I mean, you wouldn't do that. You win millions of dollars, but it's out there. It's for you, and people just don't take full advantage at the level that they can. And we do teach that also. Okay, so I get all this, I have all this money, but what should I know? And I always start out people with asset protection. And especially if you have anything. I mean, asset protection doesn't include sheltering your assets from lawsuits. That's a big part of it. But it's also having the right insurance. And you have car insurance. Why do you have car insurance? If you have a brand new car, you probably have a loan on it, so they force you to get full coverage. And that's because it's that what if someone comes along and wipes you out, or you fall asleep and hit a pole or something. You're going to have all these medical bills. You're going to have to replace the vehicle. That's what full coverage car insurance is for, is to minimize the impact of that life-altering event. And it's the same thing with health insurance. You don't have to have, well, you could be self-insured. I really don't want to get into that. A lot of these things you could be self-insured. Those things are almost a requirement. People are demanding, that everybody have health insurance. Well, it's because without it, they could their whole life they could end up out on the streets, and people know that, and we're tired of seeing that. So I always ask this question: why not life insurance? Why is that not required? Because, not to be morbid or anything, but we all die. And if any of you find out a way not to, I think that would be very profitable if you know how to become immortal. But we do. We all die. So that's not even. I mean, sometimes you could think of it. You could go through your whole life without getting in a car accident. You could. It's chances are, but death. I don't know when. I hope I live to be 110, 20, whatever, as long as I'm, enjoying life. But it's going to happen. So why not prepare for that? And life insurance isn't just about death. And I think that's what everybody thinks. Life insurance is not just for death. It's a vehicle that I was taught to use to build wealth. And that's because you build cash value in it. Your interest compounds. All these things that I talked to you about. You need to also, and I'm going to get off that subject, because I teach this in our training. So, and I don't want to go into too much depth here, because I want to focus on what you should know. And risk versus return. It's a simple concept. Just remember, the higher the risk, the higher the return. And people don't even think about this, but the money you put down to buy your home, that whatever, 3%, 10%, 20% you put down for your home mortgage to buy that home, that's a high risk investment. But people don't think twice about it, because in real estate, that's considered an equity position. So you're the first one when prices go down, and some of you have experienced this, 8 years ago, that when home prices go down, who's the first one to lose money? You are. That's an equity position. Who's the last one to lose money? The banks. And it could actually dip into their amount, but that's why a lot of them, when you put down a small down payment, they require you to get PMI insurance, which is property mortgage insurance, and you're paying insurance to insure them from loss. Like it's your fault that the market went down, but you have to pay for it. It's required. They make it required, and because they're protecting themselves. So understanding risk is the main thing. There's a savings account is low risk, but even a savings account can be risky if you don't know what you're doing, because the FDIC insures a certain level. You go over $250,000 in your account, you're at risk. A lot of you think banks don't fail. Well, they have. I went through a period where the loan and savings industry just collapsed. And now we have the major banks and a lot of smaller banks that are popping up here and there. It's in recovery right now. And you could see it happening. These new banks, new bank names I've never heard of. So banks also can, there's some risk in there. People think there's no risk. But knowing that is important. That's something you need to know. And diversification it's how much do I put into each investment? Well, that's part of my risk training. Risk versus return training is I explain to you that the higher the risk, the less money you should put into it. And when you get older, when you're younger, they say you could take more risks, but don't start there. That's part of my training also. You don't start in high risk investments. And high risk could be also things that you're not knowledgeable about. Somebody who's been in the stock market all their life, it's a lower risk for them than it is for someone like myself. I don't understand, well, a little bit, but I don't have the same knowledge level as they do when it comes to stock markets. So that's important too. And you need to diversify. You don't put all your eggs in one basket, right? And another risk factor that you're going to hear now and then is track record. It's and the whole name track record comes from horse racing, right? The track. What is their track record? The odds of that horse winning are better because of their track record, and you know what and all these other factors that go into it. It's the same thing with real estate investing that we look at. Life insurance policies, you have to look at the company's track record. Stocks, I mean, you know, hindsight's 2020, but you know, you look at somebody's track record and they keep doing better and better, most likely their stocks are going to continue to get better. That's why it's called a track record, and that minimizes risk also. And we'll teach you a lot more in our trainings, but let me get through this blog. What not to do. Here's the thing. Buy nothing with cash. And the reason I say that is because if you were to win the lottery today, you probably have a list of things that you would want to go out and buy. And I was working on a huge development project with a gentleman, and he goes, God, I can't, you know, he was counting his money before we got there. But he was saying, man, when I make my first, you know, 3 million, I'm going to buy a Bugatti, because that's about how much they cost. Around $2.5 million for a car. And I told him, well, don't pay cash for it. And he goes, why? I just want to go out and buy it. Boom, done. You know. And I go, no, really. I mean, you can do that. It's your money. But as you know, as a financier, that's what I'm a numbers guy. Take that $2.5 million and put it into an investment that'll pay for your Bugatti. Hello. And that's what's called protecting your principal. If you go out and lay down cash for anything, that cash is gone, especially if it's a depreciating asset like a car. There's no reason to do that. You need, number one, if you have that kind of money come into your life, you need write-offs. You know, otherwise taxes can eat it up. You need to find other ways to minimize your losses, whether it be taxes or anything. And don't throw away your principal. I mean, once you throw that out there, once you spend it, it's gone. But if you put it in, let's say you buy a piece of real estate that will cash flow like 2.5 million. Some of the deals that we have will cash flow very well, and I can say that with that kind of money invested in a multifamily real estate deal, he could probably buy that Bugatti and have it paid for in less than 5 years. Yeah, 2.5 million. I could show you how to make 2.5 million out of 2.5 million in around 5 years. That's our track record. So I can state that. I'm not soliciting you as an investor or anything, but that's just to show you that it's possible. And I know it's possible because I'm a numbers guy, and we do it. It's reality. It's something that's done, and we're working on every day. Okay, the next one is don't give anybody money. Anyone. I don't care if it's your mother, your sister, your daughter. Don't just give money out. And here's the reason. They may not pay you back. So what I've learned, I'm a private lender also, what I've learned is be a private lender. Lend them the money. Lend them the money with an agreement that they'll pay you back. And voila, you're going to make some interest off of that. You're going to charge them less than what they would if they had to go borrow it somewhere else. And here's another thing. This multimillionaire came up to me one time and said, you know, I've given so much money to my family members and none of them are paying me back. But you know what? I found out what to do. I went to my brother and I said, here, sign these loan documents. And his brother's like, why? It's because if you sign these loan documents, I've given you this money, right? We're not making anything up here. This is legit. But when I gave you that money, you were supposed to pay me back, right? And he goes, yeah. Well, here's a document showing exactly what we agreed upon. Please sign it. And he goes, well, that means I have to pay you back. He goes, no, it means that now that you haven't paid me back, I can take that and file that in my files with my company and take that as a tax deduction since you didn't pay me back. It's a loss. Now think about that. You know, your intention is to lend money to people, and if they don't pay you back, it's a write-off. And you write off the interest and everything. And attorney fees if you decide to file in court. Oh, and you don't have, you know, he told his brother, and I don't have to report it to the credit bureau, so it's not going to hurt your credit. Anyways, moving right along, don't work with anyone who doesn't ask you what your goals and dreams are, because this is not about them. If they're not interested in your goals and dreams, then they're only interested in theirs, right? It's like any relationship out there, folks. If you're going out with if I was dating a woman and she never asked me what I did, or she had no interest in my dreams, my goals, what are you doing? Do you like to hike? Do you like to go fishing, camping, hunting? You know, what kind of hobbies do you have? You know, think about it, ladies out there. If you dated a guy who never asked you what kind of food do you like to eat, and just took you to a restaurant, let's say Thai food. A lot of us like Thai food, but let's say you went to a Thai restaurant. He never asked you if you like Thai food. I mean, what is he interested in? He's interested in satisfying his own palate, and he really doesn't care about yours. So that's a nice little analogy to cover. Don't work with anybody who doesn't really, and it's because how can they help you if they don't know what your goals and dreams are? And then you need to build your team. Wherever you are, especially if you get a huge inheritance. My niece is lucky enough that I'm her team. And if you look down here, you see educators. That's number one on the list for a reason. You need to educate yourself because you don't know what you don't know. And I have learned through my life experiences that I can continue to do things and I move forward because I had that entrepreneur spirit, and I continue to move forward no matter what knocks me down. I continue to move forward. It's not always easy, but my gosh, I wish someone would. I've gotten a lot of education. Even with all the education that I've gotten, they can't teach you everything. So I'm not going to be able to teach you everything, but I will try to teach you as much as possible so you can make better decisions. And I really wish I had somebody that did that at that level. Most of them are teaching me how to fix and flip homes, multifamily real estate, how to invest in that, how to do the acquisitions, new construction, private lending, wealth building strategies, notes, everything related to real estate and running businesses. So I recommend you go out there, and there's free webinars all the time. I watch them all the time and pick up what other people are saying. Some of it I don't like, some of it I like. Some of it reminds me of what I forgot. It's good. Get out there and educate yourself. Invest in yourself. And you'll see there's S's behind a lot of those, because I do that for a couple reasons. The first is like with advisors and attorneys. You want to interview more than one. I know you have a friend. Everybody has a friend that has an attorney. Well, it's not every attorney is the right attorney. Not every advisor is the right advisor. And the reason I say that is because, well, for example, let me tell you a story about a guy I met. He has his parents, and he runs the company in New Jersey. It's a manufacturing company, and I told him about this. You got to be careful, because some attorneys will say, yes, I'll do the job, and not know really how to do the job correctly. And he says, oh my God, that happened to us. We were talking to our attorney, because every family, families that have a manufacturing company usually have attorneys, and they talk to their attorney, and he says, oh, I could take care of that paperwork for you to cover your intellectual property, IP. So it's an IP protection contract and paperwork that he put together. And then later on, they lost all their IP. The contract wasn't done properly and didn't hold up in court, and they lost their IP, which is traumatic. So you have to make sure you have the right people on your team. It's the same with real estate investing. You build a team, and you gotta have the right people on there, or otherwise they shouldn't be on your team. It's just like football, basketball. You gotta have the right team players, right? And not everybody's the same, thank God, but people are better at different things that create that team, and you need one too. Especially if you have all this excess cash and stuff and don't know what to do with it, find the people that can help you with that, and find the right people. And then start building your asset protection structure. Google. Anybody know what Google is? Google is a huge company that was acquiring all these other companies, and then somebody who understood the risks they were putting themselves at said, hey, you need to do this. And they created a company called Alphabet. The founders of Google all work for Alphabet. And now when you invest in Google, you're not investing in Google, even on the stock market. You're investing in Alphabet. Everything goes through Alphabet, and everything is owned by Alphabet. And Alphabet only does business with companies owned by Alphabet. So that is a asset protection strategy that they finally had their eyes opened up to, that if you're not doing business with anybody outside of your own company structures, your different companies that you're acquiring, like they have, I mean, God, they've acquired so many, and you keep them each in their own little box. Company A, Google, A through Z, man. That's why they called it Alphabet, A through Z. You segregate your assets. It's amazing that this stuff isn't taught, and you should do that even at any level. I show you in the trainings that as an individual or a family, that's why I call it family investor, you create a company structure. You run your family like a company already. It's not a whole lot different. It's not that much harder. And also, asset protection is having appropriate insurance. Insurance is cheap once you're in a lawsuit. If someone is suing you and you have the right insurance coverage to cover that lawsuit, you can go, a sigh of relief that you covered yourself and protected yourself, and you won't lose all your assets. Um, a lot of people try to do asset protection after they're in a lawsuit. You can't do that. It's illegal. You know, some attorneys out there will say, "Oh, you can move it over here." You can't move stuff when you're in a lawsuit. Everything has to freeze, so to say. You know, freeze those assets, because if you start moving stuff around, you're creating. If anything, you're even if you won the lawsuit, you've already created fraud. So now the attorney general will probably come after you for that. But and make sure all your documents are updated. There's so many of us that, I'm guilty, that power of attorneys, they need to be updated. I think I said in one video 1 year, but I believe it's 2 years. And a lot of your account holders won't accept the generic power of attorney that you get from an attorney or a paralegal. They have their own. So, but you have to ask for it. I'm banking with a bank that I had to tell them what I wanted. And another bank I work with actually asked me, "How do you want to do this? Do you want to hold it this way? Do you want to put it in a trust or beneficiary and blah blah?" You know, all these things. And I went, "Oh my gosh, why didn't my other bank ask me that?" But anyways, make sure your documents are in order, or it's possible to lose up to 50% of your estate, and that's a whole nother subject. What we offer, and you've heard me say it several times, there's free training on the website. We're going to launch very soon financial literacy training made easy. My whole goal with this training is to teach it at a level that children can understand the concepts. I want to help educate children even before they go off to college about these concepts, and maybe they can educate their parents on these things. So that's the kind of level that I keep it at. I'm going to keep it really basic like I did this training. It's a lot of talking about things. So getting your juices flowing in your brain about financial strategies and what is out there for me. And it's unbiased. And a lot of people say, "Well, you got a life insurance license. Aren't you going to try to sell me life insurance?" Well, I'm probably the best one to help you with your life insurance right now, but I'm not requiring that. This is not my goal. My goal in getting a life insurance license was so I can get behind the curtain and understand life insurance. Nobody out there was willing to sit down and teach me all about all the policies out there, all the different companies, how the policies are written, what to look for, what's good, what's bad. They won't do it. But now that or a year ago when I got my license, people were happy to take me on because they want another producer under their umbrella. They want someone that's going to produce for them. And I may produce for them, but this is not my primary reason, and I will keep it as unbiased as possible. Everything has some bias in it, but I will keep it as unbiased as possible, because that's what it's all about in a nutshell. CPR is a comprehensive portfolio review. You can see another blog that I posted just the other day. I'm willing to do that. I'll do a one-on-one with you. It's for a limited time, though. I'm very busy, but I want to help as many people as possible, and that's my goal. And definitely, you know, the training that we're launching pretty soon, I'm putting out so much information, you have no idea. So go to the website, download you know, my spreadsheet. You get a family budget spreadsheet you can download for free, and it asks you for your name and email, and that way I could let you know when we launch the training finally, and you could take advantage of the initial pricing that we're going to have, which is just mind-blowing, because it's going to go up. And if you're not there for the initial trainings offer, then I'm sorry. And also, if you want that free consultation one-on-one, send me an email at support@familyinvestor.net, and I'll be happy to to let you know what kind of information I need, and one of them is your budget. I will tell you to download the family budget spreadsheet and do your budget, and we could start from there. And then the other part would be your dreams. I will ask you about your goals and your dreams. Okay. And I'm back. I'm trying out these new methods, and I need to see for myself how this works out, trying to look professional as possible. Once again, here we are, Family Investor, Learn, Live, and Give. FamilyInvestor.net. You can click on the link, and it'll take you there, or the email address if you want to send the email, support@familyinvestor.net. Or for some of you who are in a hurry, you can give us a call. Most likely it'll go to voicemail, and leave a message with your name and number, what you're looking for, and we'll get back to you as soon as possible. Thank you. I hope you enjoyed the video. Have a great day.